So let's talk about Crompton Greave Consumer Electricals. That's CG Electricals, what we typically say. So CLSA has now upgraded the stock to an outperformance with a target price of 435 rupees per share. Now let's understand what is CLSA is actually thinking about actually upgrading the stock. Now they believe that overall CG Consumer Electricals is geared up for a faster recovery. They're better prepared, and the focus on they are focusing more on to ramp up and recover faster than what other companies are. Talking about what they've said that CG Consumer Electricals has actually posted a better than expected Q4 expectation, which showed that the companies are higher than higher than what the industry growth is, and that obviously shows that the company has resulted in some sort of market share gains as well. Now obviously the COVID second wave has impacted the business, but the company is relatively better prepared than what they were in the first wave, is what the company is highlighting. So that means that they expect a normalcy from the second half of June 21 as well. So that is also surely some positive signs coming in for the company, and obviously a valid reason to actually be positive on the company as well. Now the company has sequentially negated the partial raw material inflation as well of 20%, which was seen in the last 5 months through price hikes which they've taken of around 8 to 10% as well. And the management is also looking to negate the balance inflation effect with better sales mix, cost saving measures, as well as product restructuring as well. So this is the aim of the management, how they are planning to strategize their cost as well, given the increase in the raw material prices, and that is what is keeping CLSA quite positive on the stock. Now they believe that CLSA further believes that there's an upside, 9% upside, and that's why they have upgraded the stock to an outperform from an underperform. Now overall they believe that obviously the demand recovery is also going to be coming in the space, like I mentioned before, that demand recovery is likely from Q2 FY22, and where the management has also said that noted that localized lockdowns have impacted the momentum in Q1, but with the expected easing in the lockdown restrictions from the second half of June 21, the management is quite optimistic for the fast recovery as well, and the strong brand positioning has strengthened to the market and revamped the portfolio further as well. So surely once things open up, management is also expecting a better, faster recovery as well. Overall, the durable business is also on a strong footing. The management is confident of market share gains even going forward as well. So surely positive signs over there, and they have on the back of that, they have revamped their portfolio as well by widening the distribution network. The company has been gaining a lot of share across key segments as well, obviously especially from unorganized sectors as well. So both from organized as well as unorganized sectors, they have gained share. So surely positive signs coming in over there. Lastly, yes, there may be some concerns of inflationary which could hurt the margins in the first half of the year because of the inflation in raw material prices, and the management has also cautioned about the margins for the next couple of quarters. But like I mentioned, they are going to be taking cost saving strategies as well, and also they've taken some amount of price hikes, so that is going to be negated. So surely CLSA is quite positive on the stock, and they have maintained an outperformance stance. They have upgraded to an outperformance stance with a target price of 435 rupees per share.